Hello, everybody. So, tomorrow is the big day. We're all waiting for Q2 earnings, and me too. SoFi is an important position for me. And this video, I want to talk about student loans. But before I do, it's important for me to preface it with the fact that I really love SoFi, and I really believe in this company. I believe this company has probably the best shot out there at being the main neobank for the professionals, the career-oriented people, right? Their target customers with high credit scores, with good jobs, good average income. I believe they have a great shot at becoming a great company, which is why I'm so sad when I talk about student loans, because this video is about why the market just associates SoFi with student loans. And I think that's a problem, and I think that's going to be even more of a problem. But let me just tell you why I love SoFi, period, and what I view SoFi as, right? So SoFi right now, they have 5.2 banking clients because they're all mobile banking. But the reason why I write mobile banking clients is because, yes, their app is growing at 50% plus year over year, and it's still growing at that pace, growing extremely fast. And to give you an idea, if you compare SoFi to, say, a Wells Fargo, so one of America's top banks, Wells Fargo, only has 24 million mobile banking customers. So it's important to realize that a lot of the legacy banks that they compete in are for people that don't even have mobile banking, that don't even have an app, that still drive to the branch to talk to a teller. That's who the legacy bank typically caters to. SoFi caters exclusively to mobile banking clients, what I call mobile banking, or clients that really bank the way we're going to bank in the future. We're all going to bank through our phones in the future. That's going to be the only way we bank. And SoFi caters exclusively to that. And has, digitally native knowledge to cater to that. It's a very youthful company. And because they don't have branches, right, because they don't have the whole legacy infrastructure of banking, SoFi is able to be incredibly agile, which is what I love about SoFi. I love a company that's agile. I love a company that whatever happens in the market, they're going to be able to have a very competitive product really quickly. And that's exactly what SoFi is. And they showed us their agility during the March regional banking crisis because they were able to raise interest rates, right? Their interest rate, if you have SoFi Plus right now, is 4.4% APY, which is so high, much higher than any legacy banks. And they also were able to put in place a $2 million insurance FDIC. And they did that in less than 2 weeks, right? So when it takes years to change anything at a big bank, SoFi, it takes them weeks, perhaps not even a week, for things that are even simpler than that. So that's an incredibly agile company, and I love agile companies because they stay on top. But I would even argue that SoFi is going to win. Why? Because SoFi has the right cost structure for the 21st century. 21st century banking is going branchless. It's no branches. Branchless banks are going to be the inevitable winners of banking in the future, right? As cash is going away, we don't need branches anymore. And by the way, if you bank with SoFi, you know full well that you can have cash by just going to a convenience store, right? You can go to a convenience store with a SoFi card and you get your cash. So even lacking that teller access is really not a big deal. You can still have cash by being an online customer and an online banker. And so I view this as inevitable. The end of branches to me is inevitable. The costs are leaning towards zero. And so in my view of the future is that there will be fewer financial institutions and they will be mobile, and they will have a mobile reach. And why fewer institutions? Because of course, once you have a product that is so much better, your reward is a near monopoly or an overwhelming reach, right? Another company that I talk about in the channel is the Cash App, right? The Cash App, there's more users of the Cash App than there are in JP Morgan Chase, right? The biggest banks in the US. You have more users in Cash App. It's absolutely stunning, these fintechs, the reach that they have. Are we going to live in a future where we have, 5 big fintechs that own everything? Probably. Near monopoly. That's my view. That's my view of what's going to happen. And traditional branches, I don't think they're going to be able to compete, because this is akin to what has happened through the lens of the innovator's dilemma. If you follow the innovator's dilemma from Clay Christensen, that's the whole thing. Old companies can't get out of their own way. They just won't. They just don't do it, right? In fact, if you look at the main banks, they keep building new branches. But this is going to be the same thing as, I'm talking about the competition here. Just like Barnes and Nobles did not close its bookstores when they saw e-commerce emerge right in front of their eyes. Just like Blockbuster did not close its 9,000 stores as they saw streaming become a thing in front of their eyes. Just like CVS right now is not doing anything about its almost 10,000 US locations in the era of free 2-hour shipping, right? Amazon's entering. I'm big on HIMS and e-pharmacy in the US. Today we have shipping. Today, convenience today is not a store at the corner. No, today convenience is 2-hour free shipping, right? And they're not changing. They're not closing the CVS. Well, Wells Fargo, Bank of America, Wells Fargo, for example, they won't close their 8,000 branches, even though they are staring at the era of smartphones, the era of digital payments, the era of us going around with the remote of our life, which is the smartphone. It's right in their face, and they're not doing anything, and thus they keep the same cost structure, and they can't be competitive, and that's how you end up with silly situation where the interests that you can get at, say, a neobank like SoFi is 40 to 50 times higher than what you could ever hope to get at a traditional bank. And so that's why I believe SoFi is going to win. Because I believe in the bankless branch business model. Because I believe that also SoFi is one of the better stocks out there. SoFi, and I like Cash App very much as well. SoFi and Cash App, I believe, are primed to succeed quite a bit. Much better than, say, Ally. Ally, which is actually one of the biggest neobanks in the US, but that's a spin-off from GM and more of a legacy business. That's just my view. There may be multiple winners. But the point is, in light of all of these amazing things, SoFi is not a student loan company. And I'm keeping my shares in SoFi, for 10 years, probably more, at least for now. We'll see what happens. I'm keeping my shares in SoFi. But the market is telling me that SoFi is a student loan company. Wall Street doesn't get the message that student loans does not equal SoFi. Wall Street thinks SoFi is a student loan company. Still today, algorithms, traders, money managers, they all believe SoFi is a student loan company. Let's play a game now. I want to play a game. Okay. Can you spot the difference between SoFi, all of the good things I told you about SoFi and the potential I believe it has, and can you spot Navient? Navient is a pure play student loan refinance company. So go ahead, pause the video and try to guess which is which. Right? Can you spot? Okay, let me show you now. All right, this is SoFi. This is Navient. What is this correlation? Like, if I haven't seen is it a 0.95? What's this correlation? If I have ever seen a correlation, it's this one, right? Ever since it's been announced that the bill raising the debt ceiling stops the moratorium, these stocks have been shooting up in almost the same pattern. SoFi is trading like a student loan company at, say, 95% of the move can be explained by the student loan business and the student loan hope. And I really, really don't like to see that. I don't like to see that. To me, SoFi is just trading like a pure play student loan, and that's not what I'm invested in. This is a problem. And if the stock pops on Monday, actually, on the hype of student loans coming back, I may actually be buying some put options to create an edge. I very rarely do that because I generally have very strong confidence in my stock. But in this case, I might make an exception and do a little edging here. Because there's so much hype around student loans coming back that SoFi tomorrow, they must, in my view, imperatively show that there's a lot of current interest in refinancing student loans from their customers right now. Their customers right now are being proactive and refinancing student loans right now. They must explain to us this in the call tomorrow. And they also must guide for a lot of activity with refinancing. They really must play to the hope of student loans, because look at the stock, right? The stock is the resemblance of the stock to Navient is uncanny. Even though Navient is just a pure play student loan refinance company, SoFi has moved on. It's still trading the same way. And I'm worried, I'm worried because in the meantime, the news goes on student loans, and this is what's happening behind the scene. Of course, this hasn't been as advertised, especially in the financial community. But did you know, for example, about the grace period there on July 6, 2023, right? So, a good 40 days after this is announced, right? It doesn't get a lot of press, but this is what's going on, right? What is the student loan grace period? Keep in mind, U.S. news is heavily read by student loans borrowers and anybody into education. Very popular. They do the ranking of like schools and stuff, so they know what they're talking about. It's their area. So most student loans give borrowers some time before they must begin payments. Oh, that's new, isn't it? That's new. Payments are set to resume in October, though there will be a 12-month on-ramp repayment period that prevents borrowers from entering delinquency or default if they miss payments, right? Yeah, you should pay back your student loans as soon as you can to avoid interest capitalization, but those interests are already very low in student loans. They're artificially low. Right? So if you want to avoid interest capitalization, just start paying them off. But look at this. If you don't have any kind of savings or emergency fund, which realistically a lot of people don't have that today, because I don't know, like $11 IPA or like hanging out today, but that's expensive. So a lot of people don't have savings or emergency funds, right? So if you don't have any of that, it may be better to not make payments during the grace period. Instead of this, you could use this time to stash some money for a rainy day or spend it or whatever. If you have higher interest rates, we know interest rates on credit cards are at all-time high. This very theoretical is like, maybe it may make sense for you to prioritize your interest rates, your credit card interest rate or your credit card repayments instead of focusing on your student loans. So when I read this, I think a lot of people are going to use that grace period. I think a lot of people are going to wait 12 months and use that grace period. And are they really to blame? I don't know. We are homo economicus is what we are, right? We're rational actors. Student loans borrowers are rational actors. When they see that, they will be like, okay, let me wait another 12 months. And again, this type of news is flying under the radar. But this is where I'm especially fearful is this. Right? We are entering a very heavily charged political time. This is the end of 2023, right? We're going to have the primaries in early 2024. So this is going to come back up and up and up. And if you read this, Democrats introduced bill to eliminate student loan interest for current borrowers, even though they know it's not going to pass. They fully know it won't pass. They don't have the majority, but they're introducing a bill, right? So they're already beginning the fight to end student loans, and the fight towards forgiveness has already begun. They've already begun that. The Supreme Court just gave Democrats a new 2024 rallying cry, right? So what that means is that canceling student loans or expanding the moratorium or the grace period or whatever people want to call it, right? Or the on-ramp, the duration of the on-ramp. Doing all of this stuff is going to be a very heavy political issue, and we know that this is a stock that could be trading. Like imagine you have a Democratic primary, and whoever the Democratic leader of a primary is says, I am going to do a moratorium for the next 4 years. Imagine that happens, right? Then you got in the morning when the stock opens, you got SoFi down 7 or 8%. Like this is a stock to me that's going to be held hostage by this student loan narrative. And in the meantime, the real story is just being hidden. So you could look at it as this may be an opportunity to accumulate more, or you may look at it as, I'm tired of this roller coaster and I just want to hedge a little bit. So my take on this is I'm going to hedge. And student loan are coming back. Yes, they're coming back, but as we say in French, like Saint Thomas, I'll believe it when I see it. And for now, what I read is an on-ramp period, and what I read is a grace period. So anyways, this was not investment advice. This is just entertainment. I hope you were entertained. Please like my video. I really appreciate it. Please subscribe. I also very much appreciate your subscribes, and have a wonderful day.